Here you can see my full time and price analysis, and if I go down on the 1 minute chart, you'll see here that everything perfectly aligned with my analysis, and as confirmation for my entry, I used my powerful indicator, which then quickly turned bearish. Now, I was only seconds away from the news release, and as soon as I saw the breakout on the 15-second chart on Binance, every single one of my entry conditions have been met, and so I entered my short trade, not knowing that in a few seconds everything is going to change. And the coolest thing is that I'm going to share the exact price psychology strategy I used to predict the news, and I'm also going to show you my ultimate money concepts indicator, so stay tuned until the end. So let's start from the beginning. It's 4 a.m. in the morning, and as always I was doing my daily crypto analysis on Avalanche against Tether, and that's actually one of the most important things in trading. Finding out what you want to trade. This includes at which time, which price, and which direction you have in mind. The biggest mistake as a trader you can do is to not know what and how you exactly want to trade. Let me share my analysis steps. I differentiate them between time and price action. And time is really key in this setup because I'm trading based on the quarterly theory. If you haven't heard about it, I suggest you watching this video, but for short, it's based on the AMDX concept that says that market is always in one of four states: accumulation, manipulation, distribution, or a reversal or trend continuation. In this case, I look at the 6-hour cycles and wait until manipulation happens between 6 to 12 or 12 to 18 o'clock, depending whether a cycle starts with accumulation or bigger price movements. In this case, it was between 12 and 18 o'clock because it was accumulating in the first quarter, but let's come back to the quarterly theory later. Let's first draw in our sessions. I only trade London and New York because these are the two most volatile times of the day. Then what I also started using as a side confirmation is time doubling. Now time doubling on its own is performing pretty bad, but together with other signals it'll work better. For the cycles I use the daily, 12-hour and 6-hour. So I basically look at the previous days, take the low and plot a bullish signal 2 days, because we're doubling, from this point on. The same you do for the 12-hour. And for plotting the bearish signals, you just take the high of the last 6-hour cycle, which here was from midnight to 18 o'clock in the evening on the last day. And then you plot a bearish signal 12 hours from this point on. These signals will help us getting a more precisely timed entry. But these are one of the least important factors, so let's now look at the smart money concepts classics. Probably the most popular one is the fair value gap, FVG for short. I plot every major one starting from the 4-hour chart and slowly going down to the 15-minute chart. And later I'm gonna draw them on the 5 and 1 minute time frame for getting the best entry. Let's see the 1-hour chart for example. I only give attention to the FVGs that haven't been broken yet by price, meaning it can't close above the FVG high. This one here is what I would ignore. Now let's come to the order blocks, which are as important if not more important than the FVGs. I simply look out for the biggest candles on the chart and mark the order blocks as the previous candles or the wick of the big candle. Also, it can't have been broken yet by price. And yes, at the end, after marking all the FVGs and order blocks from the 4-hour, 1-hour as well as the 15-minute time frame, your chart will look something like that, which is pretty messy, but it gives a great heat map for where the most important levels are and where you expect price to reverse. And that's actually a good keyword. The setup or model I'm describing here is an intraday reversal strategy. This has been proven to be very profitable for me since there are barely any days without reversals. Next up, I'd like to draw in liquidity. Now I know it's always a bit hard to find out where exactly it is and what to expect from it, but I'd like to see it like that. Liquidity is basically where a lot of stop losses and take profits are put, meaning these levels will attract price because you are guaranteed to have a lot of orders to get executed. And to find these levels, I just ask myself, where would I put my stop loss and take profit if I was going bullish or bearish? So If I know that a lot of people went bullish here, a lot of them would have probably set their stop loss here, which will lead to a big bearish move once price hits all of them, because these are sell orders. The same for take profits, who are probably somewhere up there. Do the same for traders who went bearish. Where would they set their limit orders? We see there is both sell side and buy side liquidity up there, which will definitely attract price. If you still don't really know how to use liquidity, go watch my other video on it. Now, a very simple but still effective thing are the Fibonacci levels, because traders will always react to them, no matter how, even if it's just a small trend or stop or complete reversal. So I just draw in the most recent supply and demand Fibonacci levels, where price hasn't yet hit the 0.381 level yet. And also something that might be helpful are breaker blocks. Breaker blocks are basically single candles that break the trend and are later seen as good reversal points. They are the easiest to spot since they're in the contrast with other surrounding candles. And last but not least, if you're trading during the weekdays where the forex market is always open, I also respect the individual trading sessions. For example, the Tokyo highs and lows of the current day are often favored to be swept, meaning a lot of times price likes to grab the liquidity from these levels and then quickly again reverse. Or what you can also mark are previous days London high and low. Okay, that's enough for the pre-trading setup. Now we exactly know when and where we will want to trade. I then also do the same analysis on other altcoins like Cardano, Ethereum, Tron, or whatever you like. Now there are actually two steps you still want to do before you start looking for the entry, and that's your bias. Your bias is basically you aligning to the higher time frame trend. So, for example, go to the 1 hour chart and look at the market structure by detecting the latest breaks and changes. Here you see price breaking this low, meaning the downtrend is still active. So your bias would be bearish. Also, on the 4 hour chart, you see price is additionally going down in general. So I was looking to sell and set an alert above the accumulation high and waited it to be activated. And once we hit the level, our next step starts, the best possible entry. And this part includes checking the chart every minute, because you really don't want to lose your opportunity since you spend so much time preparing. In my example, I waited for price to touch one of my marked key levels, which it did. And this is where the most accurate indicator I've ever created comes into play. The Ultimate Money Concepts indicator, consisting of 18 individual algorithms combined into one in order to get you the best signals possible. So once you have it, you can get it through the link in the description, add it to the chart and wait for a bearish signal to occur. It doesn't matter on which time frame you are, just make sure in the last few candles the indicator gave a bearish signal. Actually, if all of this is too much for you, don't hesitate to only use this indicator since its signals alone are incomparably great. Now we nearly got all confirmation to enter our trade, but we still haven't met all our criteria yet. In my case, I waited until price broke its structure, meaning making a change of character. For that, I go down on a 1 or 5 minute chart, since from now on everything has to happen fast. And later on, it exactly did what I expected, and now comes the very last step of my trading setup, getting the discounted entry price. For that, I just wait for price to not break the previous high, but still retrace a bit to get that better risk to reward ratio, since I'm anyways going to set my stop loss above this level here. Now, once it has retraced to a level I'm confident trading with, I go to Binance and make my sell order ready to fill. But there's still one last condition to be met. Since I'm already on Binance, I can drop down to the 1 second chart, where I wait for it to break the previous bar's low, knowing price is now free to fully reverse at any time. And that's when I sold. And I couldn't even set my stop loss and take profit before something very unexpected happened. Price was going down like crazy, and it wasn't until I've seen the current time that I understood that just seconds after I entered my position, good news concerning the dollar got released, and since I'm trading against the USD tether, price rapidly went down, and after a few minutes it hit my take profits, winning me 4% in just one trade. And to prove it to you that I took this trade, here on Binance you can see my order history and that I sold at 36.35 and bought at 35.57. So yes, this all has happened exactly as I described. Now, there are a few things I still need to mention. One thing is that these are all a lot of conditions that all have to be met. And you will never get trade every day. I expect to trade every crypto pair I do analysis on 2 to 4 times a week. So I definitely recommend analyzing multiple pairs. And another thing is that this strategy has a very high profitability rate and lots of needed conditions to enter a trade. And that's exactly where you have to be careful. Don't let FOMO overtake your emotions. Fear of missing out is the biggest and worst fear in trading. It's the feeling that if you don't enter now, you might lose your trade, and this feeling gets even more amplified when you see price reverse like you predicted, but you didn't enter a trade because not all the conditions got met. Get used to it. That's normal in trading, and once you master to control your feelings, emotions, and greed, you will get profitable. Because it's exactly that. It's following your setup and doing only what you planned that leads you to true success. Probably even as successful as you get if you have gotten my Ultimate Money Concepts indicator. If you haven't been using it, I definitely recommend to. I've been working on it for the past 6 months and it's given me surprisingly great results. And additionally, you'll get all of its 18 partial signals, which are the individual indicators of which the Ultimate Money Concepts consists of, and calculates its major signals. It works on any chart and any time frame and can be used for any side of trading. And you can get it now for a discounted price through the link in the description. And if you get lucky, you might even get it for free if you order it before the 29th of February. And if you want more than just some pre-built strategies and indicators, you can always contact me and I'll code you your own indicator or strategy, and I can even automate it for you if you want, so you don't have to trade anymore at all.